Hello, everyone, and welcome to Market Talks. I'm Ray Salmond, head of markets at Cointelegraph, and in this show, we discuss the latest market trends by gathering valuable insights from industry leaders, traders, and analysts. Today's guest is Jake Boyle. Jake is the director of Caleb and Brown, a firm whose mission is to onboard investors into the cryptocurrency market through one-on-one personal brokerage guidance. Jake has personally handled nearly $1 billion of client transactions over the past few years. Let's take a quick look at a video about Jake. How's it going, Jake?
Very well, thanks. Yourself?
Good, good. Thanks for taking time to come on. I saw the very quick intro about you. I saw crypto since 2012, NFTs since 2017, and then there might have been something else in there. So you've been in the game for a minute.
Yeah, it's been a little while. Pretty much all of my professional life at this point. So I've probably aged about 40 years as a result of it, but no regrets so far.
I've gone gray. My hair's fallen out. Your weight fluctuates. You have anxiety attacks. You get PTSD. Been through it all. Crypto's like a never-ending, how could I describe it? It's a never-ending thriller, isn't it?
Yeah, it keeps the days exciting for the better and the worst. And unfortunately, over the last year, we've had more of the latter there. But exciting times ahead. I would like to stay optimistic.
Yeah. One thing I've learned is don't think about retiring. Every time I think about retiring and like, okay, I'm done. This bull market's the last one. After this, I'm through. I'm going to live a nice, normal life in the suburbs, buy some real estate, yada, yada, yada. Every time I think about that, the market blows up on me. And it's like, oh, great. I need to work until the next Bitcoin halving.
We'll have that conversation again in 70 years, I'm sure.
Yeah. Maybe I need to work on my risk management. Perhaps someone like you can help me with that. That could be the key, when to take profits and when to cut losses. That's probably where I'm making all the mistakes. But let's talk about markets. So this week was pretty eventful, but last week was like the belt buster, right? There's been a lot of talk about debanking or unbanking of US-based and retail-based institutional investors. And we saw this week JP Morgan break its banking relationship with Gemini. Silvergate has decided that the jig is up and they're closing their doors. And the expectation from market participants is that regulators will start to keep a much closer eye on asset flows into and out of the crypto market. So what's going on here in your point of view?
Look, I think it's quite simple capitalism there. At the end of the day, these major banks, JP Morgan, as you mentioned, at the end of the day, they have to protect their own shareholder interests and so forth. And with that being said, the risk reward ratio of crypto isn't necessarily so favorable for these big corporate players right now. Now, if Bitcoin's $60,000 and all social media is in crypto hysteria, of course, everyone wants a piece of the pie. Everyone's going to want to provide some solution to capitalize on all that money flow. Right now, we're looking at a market where we've got growing regulatory standards that are being pushed across the space. We've got the SEC and major regulatory players who are starting to take a greater look at the industry. But we've got $21,000, $22,000 Bitcoin trading volumes are in a slump. You can't blame these large corporations for simply looking elsewhere. And then perhaps in 2-3 years, if the tide shifts, then you might see them come back again. It's really just how it works. I see it.
Mm-hmm. How big of a deal is Silvergate?
It's a really big deal. Silvergate had a fantastic product. The Send product enabled such greater corporate practices for businesses that dealt with cryptocurrency. Any company that had a fiat on and off ramp, like ourselves at Caleb and Brown, we used Silvergate for a large portion of time. They were really, really good product. Of course, we stopped using them upon our risk team deciding that was not what we'd be comfortable using as a banking solution. But with that being said, we've got a huge player who provided legitimacy and provided institutional access to the industry, who is now gone. And now it's a situation where there are large companies that operate in the ecosystem who are unbanked largely. We've had such an influx recently of companies coming to us and saying like, Jake, I got to pay payroll this week. We've got funds we need liquidated. We've got Ethereum that we need to convert into British pounds and euro and US dollars, and we don't know how to do it. So the effects that it's going to have are going to be quite lasting, and it really stifles growth and innovation to a large extent.
Is this a competitive landscape where someone else is already ready to step into their space and provide the same services, or are we lost at sea for the moment?
A combination of both. There's been a few headlines recently. It looks like Kraken has got a solution that they're looking to roll out for the ecosystem. There are other banks that are out there that do have exposure to cryptocurrency businesses. It's really just the extent of it, because of course Silvergate was almost became a household name, particularly in the last 6 months. But there are smaller banks that are out there that do support crypto businesses. I mean, take us for example. We're banked with multiple currencies all around the world and numerous banking providers without issue. But that does not necessarily mean that access is going to go all the way across to retail and companies all throughout the space. So right now, the waters are certainly murky, and there hasn't really been a solution come to emerge. I am curious and also concerned to see what major exchanges do, and also some of the smaller exchanges across the globe, and what they're going to do to ensure that they have that safe fiat on and off ramp. And beyond that, crypto companies, much like any other company, they still need to exist. They still have bills to pay, expenses, and a lot of that is denominated in fiat currencies.
Hmm. So if the situation was really bad, wouldn't we see like a lot of stablecoin outflow into fiat so that people aren't trapped in cryptocurrency or that companies aren't trapped in cryptocurrency? I hadn't yet seen that looking at data from Glassnode or CryptoQuant. And do you think perhaps part of the reason for that not happening is that, sure, people can go into USDT and sit there, and that also once you leave crypto, if there's not a way to get back in, then that's problematic also. So do you think a mixture of those concerns and fears are why we haven't kind of seen a run on stable coins or exodus out of stable coins?
I think so. I would say that the largest reason would be the same reason that we haven't seen Bitcoin and Ethereum and the markets plummet any more than 2.5% in the last 24 hours. The reason being, anyone who's still involved in the industry right now is so battle hardened that the idea of another contagion event causing $1 billion company to collapse that's just another day in the office for a lot of crypto investors now, as horrible as that sounds. And with that being said, the great fear of exiting the ecosystem, and by that I mean moving out of stablecoins as well, a lot of that is what we've already seen over the last 9 months, or 6 to 12 months, particularly post FTX. So as a result of that, a lot of people who are still invested in cryptocurrency or on the sidelines holding stablecoins, they're probably quite well researched and quite hardened by what this last year has shown us, that they don't have that same emotional investment and that race to get in and get out of the ecosystem. A lot of that money has probably already moved out, which would have caused a lot of the earlier sell-offs.
Well said. I appreciate your calm, cool, bird's eye view on the matter. Like, no reason to spread FUD, right? Um, Liquidity is lifeblood of the crypto industry, and a lack of liquidity seems to create an environment where there's high volatility and price whipsaws, and that becomes the norm. So, what's your view on liquidity in the overall market right now? Are we in a crisis?
Well, if we start with macro, we've obviously seen a bit of a crunch, on the Western front of within America and the likes. We have seen Japan and China have more of an expansionary policy, and thus there has been capital injection throughout those ecosystems. What's really critical, bringing it back to cryptocurrency, is that crypto markets are 24/7. They're traded all around the world, and if you're especially if you're on a decentralized exchange, you don't even know who the counterparty is, where they are, who they are. Could be an alien for as far as you're concerned. But at the end of the day, there's going to be liquidity somewhere. The real impact that it has in the crypto market is more so that, the pardon my French, but the shit coins, as they're kind of widely regarded, and the low liquidity altcoins, well, there's now no liquidity there at all. But that doesn't mean that Bitcoin and Ethereum and the top 100 of the market cap he's going to lose liquidity to an extent that is too dangerous. But of course, any catalyst event or whale movement will be more impactful now than it would have been, say, this time a year or two ago.
Hmm. All right. This week, we saw Federal Reserve Chair Jerome Powell caution that February Consumer Price Index data is probably hot. It's running hotter than expected. There's been an uptick in inflation. We know that that's likely to possibly have a knock-on effect on the next rate hike, right? And I went and looked at the CME FedWatch tool this morning. The consensus expectation is shifted from 25 basis points to 50 basis points. We're looking at a target Fed rate of like an interest rate of like 5% to 5.25%. And then yesterday I saw some language from BlackRock suggesting that even a 6% target rate could occur. So obviously, inflation is proving to be way stickier than most people expected. So first, kind of talk to me about your perspectives on why inflation is sticky. Are we revisiting the Volcker years where inflation ran really high, but wages and employment kept rising? What's your view on the current situation?
Well, that's certainly what we've seen over this last year. I mean, people keep on talking about what's to come in the future, but let's just look back at the last year. We have had rising unemployment rates. We have had a far higher cost of living. If we just look at those two indicators, things are really in quite a horrible standing all around the world. Currently I'm in London, United Kingdom in winter, and the cost of living crisis has a profound effect on everyday people's lives. I'm sure it's the same across the US and all throughout the world. With that being said, we're in a sticky situation with inflation. We've got critical dates in the coming week or two where there's going to be market volatility when certain, whether it's inflation numbers or whether it's hikes, whatever the case may be, we're going to see that volatility. And we're in a situation right now where it's just month on month, people are just asking almost the same questions, like, is inflation going to slow down? When is the job market going to improve? Where it ends, is it repeating the past, like concerns that we may have had in the 80s, perhaps? That's anyone's debate. But it's not looking good for now. And until we have some major catalyst events on a geopolitical level, we're probably going to be looking at quite a tumultuous few months ahead. That's my guess. That's my take on the subject.
Hmm. What I find really interesting is there's two separate hemispheres. Like crypto has gotten better at realizing the interconnectivity to macro and how that impacts prices and volatility within the crypto market. But there's still a ton of people that are just like crypto only and only focused on crypto and ignore macro. Maybe they trade momentum, maybe they trade technical patterns, maybe they trade, just price action, whatever, right? Macro is irrelevant to them. But there's a really strong and unique perspective among traders that Bitcoin price is or eventually will decouple from equities and Fed policy in general. I don't see that when I look at a price chart. Um, in my view, I think we need prices to sustainably stay above $32,000 per coin to convince me that there's been kind of a strong directional change in price and market structure and momentum. Um, I'm sure you're well aware of the correlation between like Bitcoin and Ethereum and equities. So, with all that said, there's also the impact of like the US dollar index on Bitcoin price, right? So what I'm trying to say is the cost of doing business is going up. The cost of life is going up. The cost of services are going up. Basic life essentials are going up. Mortgages are at 7% in America, whether you tap in a variable rate or you go for fixed. Borrowing is really expensive and it continues to rise. All these factors exist right now, yet there's a group of traders that think that Bitcoin is going to decouple and completely be asymmetrical to Fed policy and a high interest rate economy. How does Bitcoin thrive in this environment? What's your short term and long term view on Bitcoin?
Good question. So I would love to be able to say that Bitcoin is decoupled from the broader macro indicators, the S&P and so forth. The reality is it's a little bit of a confirmation bias. You might have a 1 week range where it shows that it has decoupled, but then the following week it shows that it has not. And you constantly have traders and people online trying to create a narrative surrounding that. The harsh reality is that things are volatile and we don't really have enough data within this current economic climate to be able to say with certainty that Bitcoin is free from the shackles of what the traditional markets are seeing? Or is Bitcoin really just another asset that people buy and sell using fiat currency? And if it's regarded as a higher risk asset, which it usually is, then people will sell that as a preference before they sell their family home, for example. Now, where we currently stand with the Bitcoin and cryptocurrency still being a very nascent asset class, we're more or less 10 years old across the market. With that being said, I think it's safe to say that Bitcoin is still widely considered a high risk asset. And as a result of that, volatility and increases in the cost of living, investors are going to sell their Bitcoin before they sell their house. They're going to focus on paying their bills and retaining a quality of life before they focus on selling down higher risk assets. So I don't think that right now we have seen a pure decoupling as such. But I do think with the halving event coming and greater education coming across the market, people and investors and institutions will start to potentially look more favorably at Bitcoin specifically, as a lot of its foundation is, born on the back of the global financial crisis only, some years ago now. And as a result of that, it should logically be something which does decouple from the traditional world.
Hmm. What sort of catalyst do you think there needs to be? What are you looking for? Like, at what point might an investor decide that the Fed is screwed, inflation's here to stay, my pounds, euros, or dollars are continuing to lose buying power yearly? So, beyond just price speculation, what else are you looking for that would kind of give you that conviction or help you guide the clients that you work with to go ahead and start allocating into Bitcoin?
Great question. Look, there's a penny. The penny drops for everyone at some point in this period of time that we're in, and wasn't that long ago that the British pound paired against a US dollar was more volatile than Bitcoin paired against a US dollar. So there have been moments in time where what we would once consider a safe haven, like bonds, for example. I mean, you don't want to start talking about bonds in the UK over the last 12 months because that in itself is more volatile than some altcoins that are out there. Everyone's going to have a day where they realize, where their risk tolerance lies. And we're in a very high risk environment right now, which means things that 2 or 3 years ago were considered wild investments perhaps have a lot more appeal now. Now, with respect to Bitcoin and how we would communicate with our clients, we would encourage clients, and we do encourage clients, not to always look at things in the cryptocurrency market as a weekly or a monthly investment decision, but take more of a long-term approach. If you take Bitcoin, for example, here, well, you can look at, people often talk about 4-year cycles. You look at things like halving events. You look at some of the real foundational areas of infrastructure surrounding the asset and how that actually impacts price points over a long extended period of time. Right now, we're still continuing through a bear market. Yes, we had a little bit of recovery since the start of the year, but I mean, Bitcoin is still a third of the price it once was. So if you take a sample of 1 week or 1 month, it's very, very volatile. If you take the full 10-year cycle, you can see that it has periods of peak, and then of course it comes back down in price, much like the case with Ethereum. And the way that we position clients is just having a degree of conservatism and potentially employing strategies, be it dollar cost averaging or something of that sort, looking at core foundational indicators over long periods of time, and then applying that to a basket of investments which they personally believe they have greater conviction in, which a lot of the time, and a lot of people don't like to hear this, is simply Bitcoin and Ethereum. Now is not the time to be spruiking the next big altcoin that's got $100 trade volume a day. We have to go right back to the basics right now.
Great. Yeah, I was actually going to ask you, so what do you do and how do you manage client funds at Caleb and Brown? I think you touched on a little bit of that, but if there's more you want to say, by all means do.
Sure. Well, the way that we work, we're much like an exchange in the sense that we buy, sell, and swap. We have limit orders and the likes with cryptocurrencies, and we trade quite a variety of them with clients all around the world. Our real point of difference is that we employ a traditional broker model. So if you're a client of Caleb and Brown, you'll have a 24/7 brokerage solution. So even on Christmas Day, if you're sick of talking to your family, you can call your broker and you can discuss what's happening with Ethereum, what's happening with layer two, DeFi, et cetera, et cetera. And it provides a few things. One, you have a point of human contact, which is so critical in particularly the more nascent, riskier asset classes in the world. And beyond that point of contact, you also have the security and the underlying inherent value of having a real business that has a head office in Melbourne, Australia, that is on the board of Blockchain Australia, has been around since 2016. And as a result of that, gives that sense of legitimacy and foundational trust, which again, I hate to say, but this industry really does lack that.
Yeah, trust is an issue. So, if on Christmas Day for dinner, I need to confront my parents about having them 1 year ago buy Ethereum at 4,000 and Bitcoin at like 62,000 per coin, you could help me prepare some talking points for that uncomfortable conversation.
You might have to pretend that you're sick and buy yourself a bit more time in the market cycle. So hopefully it recovers back to those prices before you have that conversation. But look, what you've said there, it's a common issue that we have. We have so many clients around the world, and the reality is that no one's going to buy the bottom, just like no one's going to sell the top. You're always going to be somewhere in between, for the better or the worse. What people need to realize, though, is that it is a volatile market. The market's going to move when you're asleep, whether you like it or not. And there are so many unknowns. So you take care of your security, you plan, you have a strategy, you have an entry strategy, an exit strategy, you choose the coins that you have an interest in, but also make sure that your conviction is not biased by what someone told you on Twitter 2 days ago or what the person on the bus told you should invest in today. Have some actual research and substance behind it that you have conviction in. Because if you're going in blind, then you're probably going to be the exit liquidity for someone who actually has planned and strategized.
Well said. I actually didn't advise my parents to do that, so don't have to have those uncomfortable conversations, but well said. I got a few fun, fast questions for you. What is
Go
better
for it.
long-term prospect, Bitcoin or Ethereum?
Good question. Look, Bitcoin seems more favorable amongst regulators right now. The SEC, Gary Gensler, has come out and said that he does not see it as a security, but he said that everything else he does. With that being said, it looks like it could be a safer bet because it has more of a foundation surrounding it. On the other side, we've got Ethereum. Well, Ethereum's got a ton of upside in the fact that it's currently structuring for scalability, whilst being in a situation where a lot of really interesting use cases on Ethereum have not come to fruition yet. So it's still in the early stages of what it could be in the future.
hmm Layer 2, dud or a game changer?
You just got to look at the facts. It clearly is a game changer. There's more transactions done on Arbitrum and Optimism combined than there is on Ethereum itself. So at the end of the day, regardless of what anyone's personal opinion is, there is utility and investor use in those protocols.
Yeah, I agree. And one doesn't even have a token, so it's all organic and authentic and not really like, of course, there's speculation and some wash trading with the assumption that RB will eventually drop a token, but just the organic growth of that network it's been amazing. Um, NFTs and Bitcoin NFTs, is it a fad or is it something to keep an eye on?
Well, very interesting timing of the market. I would say it's something to keep an eye on. I liken the movement in NFTs. I see very much similar to how I would have seen the 2017, 2018 altcoin rally, where ICOs were like the word that every Uber driver and everyone on the street was
Mm.
telling you about. NFTs went through that pump period. The industry was humbled. Uh, Bad actors there are lots of bad actors who are being held accountable now and will continue to. And we're now in a stage of where we need to rebuild. If NFT projects can provide genuine utility and use the technology to streamline real world value or community value, then there will be success in there. If things are only going to stay as profile pictures and hype cycles, then it's not going to get the legitimacy that it needs to really sustain growth for years and years ahead.
I agree. Let's talk about stakes. Ribeye, New York Strip, or tenderloin?
I thought you were going to start going into staking or yield farming or something there. If I'm in New
No, no,
York, which hopefully I will
that.
for NFT NYC, I hope, then I'll probably go for a ribeye as a safe bet.
All right.
And a bottle of wine, given the
Bone in,
volatility.
bone out. Sorry,
And a bottle of wine or two, given the volatility of the market. I think that'll be more of a
you
necessity
might
than the
as
steak
well.
itself.
Not to mention it helps with digestion, doesn't it?
Exactly. It's healthy. So you need that if you're working long
Hmm.
hours.
Exactly. So far, our talk beyond those fast questions had been all kind of doom and gloom, inflation, inflation. What's the next rate hike? Where's the liquidity? When's Bitcoin price going up? It's just all bad news in a bear market, isn't it? But give us some hope. What are some positive things that you have seen happening in the crypto space recently? And what do you think will translate to a more robust, trustable industry and possibly a little bit of green in the wallets of investors?
Great question. So I'll start with Silvergate just because we touched on that before. I think one thing that's really critical to note here is Silvergate's product was a good product, and it was a game changer for the ecosystem. Much like the idea of an ICO or an ERC20 token, has foundationally proven to be a good idea in some use cases, but in other use cases, it was an absolute horrible idea. In fact, there are no shortage of ERC20 tokens, which are outright scams. What I'm trying to say there is that underlying technology and the companies that operate using that technology, there needs to be a line of separation drawn there. So I'm optimistic that throughout these last few years, we've had some horrible events and catastrophes, but we've also improved the stack of technology which the industry represents. If we can get better actors with a better regulatory framework that's more focused around consumer protection, companies will be able to utilize that technology, communities will be able to utilize that technology in such a way that actually empowers the end user but safeguards them. So to further to that, exchanges, no one was asking questions about proof of reserves. That wasn't even something that anyone would mention until FTX. Sometimes we need these horrible events in order to improve the standards of what the industry is to become in the future. I say that in a very unhappy tone because the scale of FTX is, of course, of colossal magnitude. But if I was to try and find any silver lining in the situation, I would like to say that it would be that the industry is now positioned to evolve where consumers are not just logging into a website and throwing money in there and hoping for the best, but they're actually ensuring a degree of education and understanding, which is higher than what it's been in the past, but with regulatory bodies and industry standards and industry leaders that are propagating a standard of service which actually focuses on those consumers and keeps those companies accountable.
Hmm. Yeah, I agree. So it's kind of like a volcano. It blows up the magma, the lava, it kind of just scorches the earth and removes all the plant life and all the diversity of living organisms. But then after that, things start to come back. The soil's enriched, new life begins to emerge. All the riffraff has been burnt away. And 20 years down the road, you end up with a beautiful forest. So I'm hoping that just this whole scorched earth policy and getting all the bad actors out, of course, there's some others will step up to take their place, but I'm hoping that the new day looks better than the last year did.
I agree.
So, what's the institutional perspective on the upcoming Ethereum unlocks after the Shanghai upgrade?
Look, we deal with a lot of institutional clients and we're a large institution in the space ourselves. The stance that we have as a company and more so the clients that we work with is we're pro innovation, we're pro adoption. We're not so focused on short term volatility events because, as a company and also our clients, we're not trading short term news cycles. We're taking more of a fundamental long term approach to things. So, when it comes to Ethereum, well, look, there is definitely going to be a lot of trade events there and volatility because there's quite a large unlock, of course. And if things get pushed back or postponed, or if there's any controversy surrounding the event, of course, that's going to be an event which people will take short term trade positions on. However, at the end of the day, if we can migrate towards an Ethereum protocol which allows for better decentralized applications to be built on it, It allows for more cost-effective transaction and innovation across whether it's DeFi, whether it's GameFi, whatever the use case may be. If we are moving in a better direction throughout this bear market, then ultimately that is really the focal point that we're taking. And we find that a lot of institutions also take that approach. Institutions who work with us, who are trading large amounts of capital, they're less interested in short-term volatility events. They're more interested in long-term sustainable growth opportunities. And thus these updates are not such emotional dates. They're more so things which will indicate an idea of timelines as to when technology might be better or worse.
Right. So, what's more attractive to you and institutions when it comes to ETH? Is it the yield, 4 to 5%? I can go get that on gilts. I can go get that on USTs. I can go get that on CDs with 3 month durations, certificates of deposit right now, or even higher, probably 5 or 6% in the coming months. So, is it ETH yield that's attractive? Is it the fact that the token is trading around 1500 and we've seen it go up to 4800? So there's kind of a momentum or a long-term play there. Is it the liquid staking derivatives that are attractive? Is it buying into the infrastructure and having a position in that space for 4 to 5 years down the road? Is ETH just a proxy for investing in DeFi and having exposure to all the DeFi primitives that are in the Ethereum ecosystem attractive to you? Like, for an institution, I know you guys tend to be risk averse and want to balance how much risk you expose yourselves to. And it would be wiser to get like 5% compound yield over a year on $1 million than to put out like 40% of my portfolio to try to get a 50% return on ETH in the next 6 months. Like, I understand the way you guys work and think. So what is it about ETH that is most attractive to a sophisticated investor?
Great question. I think all those examples, in varying extents, are all right for a lot of investors that are out there. What we find with the clients that we work with is a lot of the ultra high net worth clients, family office accounts, corporate accounts. They're not solely exposed to cryptocurrency. They have exposure across numerous industries that have nothing to do with cryptocurrency as a whole. So if they're looking to invest in Ethereum, a 4 to 5% yield is not really attractive. With interest rates as high as they are right now, they can get that through traditional means. Ethereum is not the most desirable investment purely for the point of that staking yield. They're more so interested in the fact that Ethereum, many would argue, was 2 to 3 times the price when it was half the product. We had periods of times where in the NFT boom that a single Yuga Labs mint would cause colossal delays in the infrastructure of Ethereum. And we're going to be in a time ahead from now where we won't have issues of that nature. The technology is improving and allowing for scalability, but the price point is significantly deteriorated from where it was only a year or two ago. So with that being said, a lot of our conversations aren't really about yield. They're not about staking. They're not about anything too complex outside of the simple fact that clients, they want exposure to the technology. Some of them, they really like certain use cases, such as decentralized finance. And if they're a large institution, they might decide to take exposure to Ethereum and gradually enter the market of Ethereum over time, instead of having to dabble in Chainlink, Maker, Aave, et cetera, et cetera. If they just take exposure to Ethereum, then it's the underlying technology to which DeFi could be something that gives momentum to the price over time, or maybe it's another subset altogether. But that's what we're finding is the main interest that clients have.
All right. Thanks for sharing those insights. Last question. I saved the best one for last. The Bitcoin halving is like 400 days away, and it always leads to some lovely speculation and fireworks. So, what are your views on the event? What are you excited about? What are you worried about? Especially given that we have choppy markets right now. And I believe that in the next 6 months and beyond that, we will continue to have choppy markets. So might that impact the halving?
Great question. So the halving is a very polarizing part of the cryptocurrency timeline. And the word market cycles gets thrown around a lot, 4-year market cycles, bull, bear, and so on. Now, if you do subscribe to those market cycles, or if you just Google crypto Bitcoin market cycles, then that would suggest that the point of halving is a very optimistic point for cryptocurrency investors. Now, the kind of concern that I have is more so surrounding the infrastructure. We've seen the hash rate actually hit all-time highs, even while the market has declined significantly. But we want miners of Bitcoin to be incentivized. We need the technology surrounding how Bitcoin is mined to continue to improve, to ensure that it's competitive and ultimately profitable. We don't want to be in a situation where the cost of buying Bitcoin is far more attractive than the opportunity of mining Bitcoin. That would be quite problematic because ultimately it means a less secure network, which means the inherent value of Bitcoin can become less. Now, no investor or miner wants that. So hopefully we get some more price stability, ideally at higher values than where we are right now, between now and that the halving date. We're in very choppy market territory right now, whether it's Bitcoin and altcoin or any other investment or asset class around the world. Everyone is in the same pool there. So hopefully the halving event really draws investors' eyes towards the foundational long-term attributes of Bitcoin and the value that that provides. We spoke about 10, 15 minutes ago, we were talking about Bitcoin migrating its price action away from traditional markets. And if Bitcoin is to do that, I think a catalyst event will be something like a halving event, which actually draws investors' eyes towards the simple fact that Bitcoin does not operate, it is not validated in the same way that a stock operates. It's actually a completely different asset class in almost every capacity to that extent. So I hope that that will be a nice catalyst event for further education and understanding of what the core values of Bitcoin are. Will that increase the price? Well, historically, we have had price rallies in those periods of time. I certainly hope that's the case again. I think everyone would take that win if they could aim for it, but time will tell. It's going to be some choppy waters between now and then.
I agree. Well said. One question from the audience, if you have time.
Of course.
So, one watcher asked, what do you think about the yield curve inversion? Is a big recession really coming?
So I think a lot of that really depends on how the next probably 1 to 3 months go. We're still in that very choppy territory of seeing what the figures are going to look like in terms of employment rate, what things are going to look like in terms of interest rates, cost of living. They're probably the three fundamental matters there. There's also catalyst events. Of course, there are geopolitical events all around the world, which I'm not qualified to talk about. But in the event that there was any major movement or resolution in those events, there's plenty of room for black swan market movements as well. I guess what I'm kind of saying there is so much uncertainty on a macro and geopolitical stance. And then there is even further uncertainty within the crypto market and its infrastructure itself, that to be able to make a prediction is very difficult for me. It looks as if the probability of a recession seems to be less now than what people were predicting 6-9 months ago, at least the general populace and general kind of polls. Personally, I haven't seen things get any better at all. And the clients that we work with are more concerned now than they have been in the past. So until we get some kind of clarity and some kind of solidarity from leaderships and governments around the world and what the future is going to look like, then I think we're going to be in pretty choppy, bleak territory for a little while. But I hope that's not the case.
Yeah, to simplify things, it would be great to have a recession in the US because the Fed achieves its target then. So let's get unemployment up. Let's mute consumer demand. Let's start to bring good prices back because there's no demand for anything and producers need to move stock. So as crazy as it sounds, in the short term, it would be terrible for those that lose their jobs, for the crypto industry and whatnot, but it would at least in the short term resolve some of the issues that the Fed has with being ineffective in curbing inflation and getting back to that target rate.
I think that's what's really critical to note is you can put prices up overnight, but you can't take them down overnight. There's a lot of lagging indicators here. And at the end of the day, we're in a situation where I would much prefer us to fail fast and move forward accordingly. But the global macro environment is very different to the price volatility of a cryptocurrency. And as such, I do believe that it's going to be a longer game, and we might be in for quite a choppy year.
Hmm. Should I interpret that as hard landing or soft landing?
Ask me again in a month. I'm waiting to see how the. I'm
Answer.
waiting. Honestly, I'm waiting to see the figures that come out over the coming weeks. We've been debating it in
Mhm.
the office today as well. One moment it's hard, one moment it's soft. Another moment we're in a recession. It's the end of the world. Another moment things are starting to look better. I'll have to get back to you on that one.
Well, you know what? The sun's out, the moon's still shining. Life is still to be lived, right? Like beyond the numbers, life is great. So don't focus on it too much.
We're getting into summer soon, so we'll be optimistic. And look, as we mentioned over the course of this video, there clearly are some areas of optimism. Tech is improving, and hopefully, regulation doesn't stifle innovation, but rather it bolsters consumer protection. I'd like to take an optimistic view, but in saying that, let's see how the next few weeks unfold. There's obviously a lot happening right now in the market.
Exactly. Well, Jake, I appreciate your time. It was great chatting with you. Thanks for coming on. For members of the audience that are curious about what you do and your insights and they want to hear more from you, where can they find you?
If you just Google Caleb and Brown, we're Australian based, but we're 24/7. We deal with clients all around the world. Full brokerage solution for cryptocurrency. And even if you just want to give us a call on our 1-800 number and get in touch with one of our brokers, there's actually no cost of talking to us. So if you ever need a voice to bounce some ideas off, always more than happy to help.
Awesome. Awesome. Well, we appreciate what you do. Thanks for coming on. Audience, you've been listening to Market Talks. You can find us here every Thursday at 12 p.m. Eastern. Thanks for tuning in. Appreciate you, Jake. Thank you.
Thank you so much. Enjoy your day.
All right, you too. Bye-bye.